Hello everyone, welcome to today's session in Quantsapp. In today's video, we will be learning about how you can select strike price efficiently. But before starting the video, if you are new here, you can go in the description. There is a link below. With the help of that, you can download and install Quantsapp web application. After successful registration, you will get some free tools that will help you out in your trading. In the application, we have a video library. So in the video library, we have made multiple videos for you. These videos are based on Pro Plus tools as well as on various strategies. So in your meantime, you can go and watch them. They are available in multiple languages as well. Now at any point of time, if you guys are having any kinds of doubts or query, so you can contact us from here. You have to go in the support, so you will get our contact number as well as email ID, so you can contact us and we will be there to sort your queries out. Let's start today's lesson now. Okay, now today's lesson will be on how you can select a strike price. Okay, so how you can select the strike price. Okay, now when we are talking about strike price, okay, so let me just change the color so that it will be more visible to you. So you can trade in ATM option, okay, that is your at the money, okay, or you can say in present. Okay, in present you can trade in the money. Okay, so when I'm talking in the money, it means if my market is moving at 500, okay, and you can say there will be OTM as well. Okay, that is your out of the money, right? So if my market is currently trading at 500, okay, and I think that my market can go above 500, so what I will do, I will just buy ATM. Okay, so that means my market will go above 500. Okay, my market is currently trading at 500, so either it can go up or it can go down. So I am just making a bet that my market will go above 500, that is my ATM. So in that scenario, I will just buy ATM call option, right? Okay, now at any point of time, okay, if I think my market can go above 300, okay, so you can see my market is already trading above 500. Okay, sorry, my market is already trading at 500. Now what I am betting on, I am betting on my market will expire above 300. Okay, so you can see if I'll write it here as 300. Okay, so you can see my market is currently trading at 500. I am making a bet that my market will remain above 300 at the end of the expiry. It means my market is already above 300, so that is when I am in the money. Okay, so that is my in the money. Okay, so you can say that it is my you can say it is a past. Okay, it is a past. Okay, now if I am making a bet like my market will end up above 700 at the end of the expiry, so that can be, I can treat it as my future. Okay, because currently my market is not you can say above 700, or it is not near 700, it is currently trading at 500, but I am making a bet that in the future at the end of the expiry it will end up here. So it means my market has still you can say 200 points to go, right? So that is when, that is my OTM strike price, or that is, you can say, that is your future. So from now on whenever we will be talking about present, so it means you can just remember you know, ATM, OTM and ITM, like present, this is my present. When we will be talking about OTM, so it means we are talking about the future. Okay, because the market still have a very long way to go, right? And whenever I will be talking about past, it means the market has already above your given strike price or your given number, you can say, right? So if I'm betting on 300, so my market is already above that, right? Now this is the case I'm talking about call. Okay, this is the case when I'm talking about call. Whenever I will be talking about put, so the scenario will change, right? So in this scenario, what I will be betting on, if my market is currently trading at 500, so I will be betting, okay, that my market will remain below 300. So it means my market is 300. So at that point of time, this will change. So this will be my OTM and this will be my ITM for the you can say for the put option, right? So this will be my ITM. So again, this will also change. So this will be my future and this will be my past, right? So I hope this is much clear to you now. Okay, so let's see in the application as well. If I will open the option chain here, okay, so you can see in the region where the color is dark, so that is my ATM option. Okay, so this is the call option, this is the put one. Okay, so first of all we will take the example of call one here. So in the call option, the blue region is showing me that it is my ATM strike price, right? If I'll go in the upward direction, okay, the numbers are in, you can see in the ascending order from smaller to bigger. So you can see if I'll go in the downward direction, so this is 52,500, then 52,700, then 52,900. So the numbers are increasing, okay, in this direction, okay. And similarly, the numbers are decreasing in this direction. So if I'll go in the upward direction, so my numbers are decreasing and they are increasing here, okay. Now, currently my price is 52,500. I am checking Bank Nifty. So the trading price of Bank Nifty, currently the Bank Nifty is trading at 52,200. Okay. Now, if I will bet on this strike price, that at the end of the expiry, what is my expiry? That is my expiry is 27 November 2024, right? So I am betting that at the end, or you can say when this expiry will reach at this point of time, my market will expire above 52,500. Okay, so I am betting on this. Okay, my market will expire above 52,500. Currently market is at 52,200. Okay, so this must be 52,500. So I am betting my market will expire above. Okay, so at any point of time, if my market will expire above this level, above this strike price, at that point of time I will be in the profit. Okay, but if my market, if it will expire below this region, so at the time I will end up in loss, right? I hope the concept is clear. Okay, now if I will be betting on this one, that is my ITM. Okay, so on this I'm betting that my market will remain above 52,000, right? But you can see already my market is trading at 52,200. It means I'm already above that level in which I'm betting on, right? So this is my ITM option for the call, right? Similarly, here in this section, if I'll analyze the put as well, so currently the trading price is 5200. So for my put, okay, this will be my OTM and this will be my ITM strike price. So in the put direction, I am betting the market will remain below a certain level. So if my market is currently at 52,200, and if I will bet on this one, that is 52,500. So currently my market is 52,200 and 52,500. So I am betting on that my market will remain below 52,500. But I can see already my market is below that, right? So it means this is my ITM option, that is we considered it as passed, right? And similarly, if I'll bet on this one, that my market will remain below 51,900. So 51,900 will be somewhere like this. So still my market has to move 300 points, okay, to go below this region. So my market has to move 300 points, right? So I can consider that as my future, and that will be my OTM strike options. Okay, so I hope the concept is clear, like which is the ATM, which is the ITM, which is the OTM, okay, and why we are denoting it as ITM, ATM or OTM. Okay, I hope that concept is clear. Now we will be heading on to how you can choose the perfect strike price whenever you are trading in the options, right? So along with this call options and with ATM strike prices, okay, then you can see the premium of particular strike price. Then we have the IV, that is the implied volatility, how the you can say the premium will increase or how much increase in there will be in the premium. So that is being denoted by this delta as well. Okay, then we can see there is a volume. The volume means the interest of the people, and then we can see the open interest, that is the open contracts in a particular strike price. Okay, so if I'm talking about 52,200, so we can see in 52,200 the open contracts are approximately 14 lakh. Okay, 14 lakh in the call side. So it means 42, you can say the 14 lakh call sellers are sitting there who wants market to remain below 52,200, because whenever we are talking about options, okay, so when we are talking about options, okay, so there will be futures and then there will be options. So whenever I will be talking about options, it means I am denoting my OI in terms of sellers. Okay, in terms of sellers. Why? Because whenever we are trading in options, okay, so in options there are buyers, so there will be sellers, but the sellers are more dominating, or you can say they are the smart traders. Why? Because they use more margin, they have unlimited profit, unlimited loss, and they have a limited profit. And that is why whenever they are making their position at any level, so we think that they might be having some kind of strategies, or they might be knowing something that the buyers don't know, right? So that is why we denote the open interest, okay, or OI in terms of sellers whenever we are trading in options, okay? But whenever we will be trading in futures, at that time the buyers and the sellers, they both are in equal terms, okay? So we don't denote the open interest in futures as in the terms of sellers, okay? So we denote the futures OI as a combination of participants, but in the options it is denoted in the terms of sellers. So I hope the concept is clear, right? Okay, now what is the process to select the strike price? Okay, so for example, currently just assume like we are very far from the expiry. So currently my expiry is on 27th, okay, and currently if I'll see, so I am on the 25th. So if I'll go with today's scenario, if I'll go with the current scenario, so I am very close to my expiry, okay? But we will take an example right now when we are very far from the expiry, okay? So just see here, you can see the delta is 0.56, and on the ATM strike price the delta will be 0.5 always, okay? 0.5, approximately 0.5 it will be. So it will denote the uncertainty, okay? Because 0.5 it means the delta is showing you 0.5, it means 1 by 2, okay? So it means my ATM strike price, it can be expiring, okay, it can be expiring in the money or it can be expiring out of the money, okay, on this date, that is 27th November, okay? Or there is one more definition for the delta. So it will tell you how much your ATM strike price or your OTM strike price or any other strike price, okay? Or you can say how much the premium will change as per the underlying asset. So for example, if my Bank Nifty futures moves with 20 points, okay, or you can say 1 point, if my Bank Nifty futures moves with 1 point, so at that point of time, if I'll be taking this, if I'll be buying this option 52 to 100 call option, ATM call option, so my premium will be increasing with 0.5 paise, okay? So it is denoting that, right? Simply, if I will be trading with this option, that is my OTM strike price, so OTM call, if I have an interpretation that the market will go in the upward direction and I'm going to buy this one, that is 52 400 call option, right? So at that time, if my market will move with 1 point, so I'll be having a profit of 0.39 because my delta is 0.39, right? Okay, now you can see here, when I will go in the ITM side, so if my market, if I am having a bullish sentiment again, okay, and the market moves in the upward direction, and at the time I am buying this one 52,000 call option, that is my ITM, okay? So you can see the delta is 0.61. It means if my market will move by 1 point, the premium will increase by 0.61, and that delta is greater than this one, that is my OTM. So I have one thing from here, my delta will be greater for my ITM, okay, in comparison to the OTM, okay? So it is very better to trade in ITM options, okay, not in that much ITM, but it is better to trade in the ITM options whenever you are very far from the expiry, right? So that time you can go with the ITM options, right? At the same time, if you will see here in the IV, okay, so we will go with the Vega. So let's see Vega here. Vega is here, okay. So you can also see here in the Vega. So what is Vega first? So when we are talking about Vega, so Vega is nothing but the change in premium with comparison to your you can say volatility, okay. So if my volatility changes by 1%, okay, then how much it will impact your premium, so that is being denoted by the Vega here, right? So we can see in the option chain, the values of Vega are denoted you can say below every open interest, okay. So we can analyze from here when we are talking about the ATM strike price. So you can see the Vega is 15.41, okay, and as you will move away from this ATM strike prices, as you will move away from this strike price, ATM strike price, okay, so your Vega will decrease, okay. Similarly in the upward direction, when you will go far from the ATM strike price, so your Vega will decrease, okay. So that is why I am saying you can trade in ITM options, okay, in ITM options, but just don't go in that just don't take the trade of deep ITM options, right? Because in that, if the volatility will increase, still you will not be having that much of profit because of the low Vega value, right? So you have to take the trade of ITM options, but just take the close ITM options, the ITM strike prices which are close to your ATM, okay. So you can go just 1 up or 1 down or 2 up, right? So this is how you can take the ITM options. Now the question remains, what if my market is very close to the expiry? So for suppose if we'll take the today's scenario, currently the market, the date is 25th November and the expiry is 27th November, so I'm very close to expiry. So at the time when you can say you are trading on the expiry, okay, or there is just 1 day left to expiry. So at that time what you can do, you can just go with the OTM options, okay, you can just go with the OTM options, because one down OTM, you can say, not very much deep in the OTM, but when this is my ATM option, okay, so just one down OTM, okay. So you can see if my current price is 52,200, so I'm going with the one down, that is 52,300, my OTM call option. Okay, so I will trade with this strike price. Why? Because in this strike price, at any point of time, if I am buying 52,300 call option, okay, that is my OTM, and my market will move with my sentiment, it will move upward direction, and at that point of time, if this strike price will range, for example, if my market is currently trading at 52,200, right now I am buying this option, that is 52,300, okay, so I am buying a call option of this is my OTM. Now at any point of time, if my market will move in the upward direction, and I am making a view that my market will move up above this strike price, so if the market will move above and this price will now become the ATM, so at that point of time I will have a benefit of gamma here, right? So I will have a benefit of gamma here. There can be a gamma explosion in the you can say whenever you are trading in the expiry also, and that is why you see there is a very sudden and quick movements in your premium whenever there is a expiry, right? So what is gamma? So gamma is nothing but the change in delta with respect to your underlying asset, so that is the gamma, okay. And we usually see the movement of gamma, very drastic movement in gamma whenever there is expiry, right? So whenever you are trading in expiry or very close to expiry, for example 1 day remaining, so at that time you can just go with the OTM option, one down OTM, okay, not more than that, right? Because if you will go more than that, so at that time you can see the theta decay will be very you can say a very good theta decay in those option, and also the delta is not that much good. It means even if the market will move in your favor, so your premium will not increase, right? And as we are a buyer, as an option buyer, okay, you will see there will be some theta decay, and that is not in your favor, okay. So that is what you have to take care of as well, right? So I hope the concept is clear. I hope you got to know how to select the strike price whenever you are trading in options, especially when you are far from the expiry or when you are close to the expiry, okay, and what are the things that you have to take care of. So we have talked about multiple things, right? I hope you got to know good today. I hope you learned something new, okay. तो concept clear हो गया होगा. अगर आपको मजा आया, you can share your reviews in the comment section. You can like and share this video. If you are new, make sure to subscribe the channel as well. Thank you so much. This is your trainer Ankit Singh Rawat. Have a good day.